are going to discuss about the double entry system. In a double entry system, we are talking about two sides. Two sides, we have the left and we have the right. As of now, let's try to leave our thoughts about the left and the right concept. Okay, so in a columnar, this would be presented like this one. First, that number one column is where the amount is to be recorded, that's the left, and the second column is that is where the amount, another amount to be recorded, that's the right. Okay, but before going further about the double entry system, it would be a helpful um, means of understanding the one side instead of going to the two sides directly, which is the single entry system. And we are going to understand the evolution from the single entry system to the double entry system. Now, to understand the single entry system, let's have this scenario. Simple business transactions like the laundry business. So first, we are going to infuse funds in order to start this business, and that is the capital. Now, in a single entry system, this is how we record in a straight, simple manner of our transaction. So first, we have this initial capital investment of 100,000. Simple as there are two columns of this. First is the description, and the second is the amount. And we record only one line transaction for that one transaction. So that's why we call that one a single entry system. So let's say we have another transaction after we have obtained capital from the owner. Second, we obtained bank loan, 20,000. Then we pay the rent. Then we paid purchase price. Then we count at the end of the day how much is the balance of cash left. So we have 55,000. Okay. Now, it would not be viable if the business is growing, sales, transactions are growing, money are growing, operations are growing, we buy more supplies, customers are growing, etc., etc. So that's why we need a double entry system, because this is a question. Is the single entry system still viable for this? Of course not. What if there are hundreds of cash transactions in a day? So it cannot be handled by a single entry system. That's why we need the double entry system. Let's say we have the transportation, purchase supplies, sales, purchase supplies again, office supplies purchase, telephone, another sales, another sales, another sales, another purchases. So having all of these, etc., etc., cannot be handled by the single entry system. So that's why we have the double system. It is because the single entry system cannot answer you if you are going to ask about how much is your sales, how much is your purchases, your utilities, your transportation, your rent, etc., etc. So welcome now to the double entry system. Again, it's a two sides system with the left and with the right. We will not name it with a technical term, but we just have this left and we just have this right. Again, that's the columnar. Okay, in the double entry system, first is we are going to convert this initial capital investment that's recorded as simple as this one by the single entry system. Now, again, on the double entry system, we have the left and we have the right. So, to apply, to record this initial capital investment under the double entry system, first we have to record that on the left, which we have the cash we received, then the right, that is coming from the capital. Again, what we have received is the cash, and where it came from, okay, which is the capital. Now let's record further the other transactions, like the bank loan obtained, prepaid rent that we paid, and the purchase of supplies. So in the bank loan, we receive cash, and in the right side, we say bank loan 20,000. Then, on On the left side, we say that we spent 60,000 for the rent. Then on the right side, it was spent for the rent. On the left side, again, we paid for the supplies. It says that we have deducted 5,000 for the cash, which is for the supplies. Okay? And so on so. Then the total on the left and the total on the right should be equal. That's the rule. Okay. Now, before going more to before going to more transactions, let's try to understand how the system works, because this is a very fundamental of going further in understanding about this bookkeeping, these accounting steps, these accounting procedures we're talking about until we can come up with a balance sheet, income statement, and other financial reports, like the cash flows. Okay, first, if we see left side with a total left of 55,000, what does it tell us? Okay, it tells us what is left in business. What do we have now at the end of the day? It says that we have 55,000. What about the right? The right will explain about where the money came from, which is explained with the positive transactions on the right. And another thing that it explains that where it went, where the money went, because what we have is only the money, the cash. The question now is where it went. The negative transactions on the right explains where the money went. It went to rent and it went to supplies, 60,000 and the 5,000. So, in that way, we understand now how this double entry works. That the left side tells us what is left in business, that the right side tells us two things: where it came from and where it went. The positive transaction tells us where it came from, while the negative transaction tells us where it went. Okay? So that's a fundamental, and I need you to understand this one because the next level will be more videos to understand, and I need your focus on this.